And now we're going to move swiftly on as Gebolys from World Energy is making his way up from the back of the room, and we're going to have a conversation about moving from one commercially producing facility up to multiple and the challenges that has. How are you? Good to see you. Good to see you. So, Gene, just start us off. How's everything at World Energy?
Well, first, thanks for having me. It's been an incredible year. It's a really interesting time. It was very interesting sitting through that panel. I would say we're in a period of really having accelerating uncertainty and accelerating progress, and so we're just learning a ton, and it's a really interesting and dynamic time.
So you've got obviously your project in California that is producing. You're working on one in Houston, and you've got
Correct.
one in Newfoundland as well. That's slightly different, but you're
Yeah,
working.
the Newfoundland project is different. It's primarily a green hydrogen initiative, but yes, the primary operating plant is in California. We've been working on a project in the Gulf for some time, and we've learned a lot there as well. And then completely different thing in Newfoundland.
How have you found sort of looking at developing a new project, sort of a second project versus sort of setting up the first one?
Man, there's a lot of learning going on. I find being in the market to be so essential to everything else we do. Facing the big challenge in this, and as I sat in on a session yesterday, and I just listened to this session just now, so much of this is about demand. And if you can get the demand lined out, then the rest of it is more relatively straightforward, notwithstanding all the things that others have talked about that are important considerations. But we're learning so much about what business we're in, what industry we're in, what problem we're solving. And really, until we know what we're doing, whose problem we're solving, it's very hard to figure out how to supply into that. And so I think we're just learning an awful lot about the industry we're in.
You came here and spoke last year and spoke about book and claim and the movement. We had a couple of sessions looking at it yesterday. The development in that space in regards to SAF has been huge over the last year, and that's a massive component in driving demand and showing those signals for you developing those projects as well, isn't it?
Yeah, that's right. I mean, I think that goes right to the point I was talking about in terms of what business we're in. People talk about the green premium all the time, and I think Bill Gates in his book did wonders for understanding around climate issues generally, but a big disservice was the term green premium. And it really is misguided because it doesn't account for what the products do that are different. So traditional jet fuel gets an airplane from point A to point B. SAF gets an airplane from point A to point B. They both provide that service. What SAF does that traditional jet fuel doesn't do is provides decarbonized flight, a completely different service. And so when we think about the premium as a single product, I think we really miss that notion. And if we don't really separate those two, and if we don't focus on the real industry that we're in, which is decarbonizing flight, we really miss the point of why we exist.
And considering the backdrop of US policy, a lot of the discussion over this side of the pond is about policy driving production, and with the uncertainty and volatility we've seen in the US policy landscape, the role of demand's become that much more important in showing sort of secured revenue streams as opposed to where you could previously count on the tax credits or things like that.
Yeah, I think oddly, I mean, I don't think it's any secret that it's hard to figure out the U.S. government, right? We're kind of in a period of governance by mood, and that's a little tough to figure out. So, but oddly, I think this is a really important experience that we're going through, because for so long we've had this notion that if we can only get a strong balance sheet off-taker and a strong balance sheet supplier and a good financier to do project finance in the middle, that this is all pretty straightforward, assuming that we have some really consistent public policy that is predictable over the period of the capital life of a project. Well, I think everybody in this room knows that's not happening. And if you didn't know it before January 20th, you know it now. We live in a world of policy unpredictability, whether you're in the US, whether you're in Europe, wherever you are. We live in a world of rapidly changing dynamics, and the only chance that we have in this space is to be agile. We've got to get kind of past this idea where we sit in a room like this and we all talk about what policymakers ought to do, and then we all go home and nobody does anything. That's not going to work. We've got to learn how to act in the face of uncertainty, and I think we're learning how to do that. The big key to how to do that is we're not alone. It turns out that there is a market for decarbonizing flight. There are entities that will pay for the ability, if it's a high-value product and if it's a highly traceable product with good authenticity, there is a market for getting from point A to point B in a decarbonized way. This gathering, for example, there are some of us in the room who didn't decarbonize the to and from of this. The organizers didn't pay for everyone to decarbonize their activity. In the future, you're not going to Climate Week in New York without decarbonizing that activity. You're not going to future COPs without decarbonizing. It's insanity that hasn't already been the case, but it hasn't been the case because we as an industry haven't enabled it to be. So whether you're an airline or you're a producer or whoever you are, you're in the industry of being able to make that so.
I would like to point out this is a carbon neutral event. Everyone thinks you develop one project and it unlocks, everything, and it's very easy to do another project. From your experience in trying to do that, do you want to sort of correct that misnomer? Is it as hard setting up the second one as the first one, or are the challenges just different?
Well, obviously it's all hard, but as time goes by, as the challenges change, right? And we're a great case in point. We've had a great strategic partner in Air Products for a number of years, and Air Products, like many incumbent energy companies, are going through their own strategic review and their own strategic shift. And as they're doing that, their priorities are shifting. And so, as some of you might know, last quarter, Air Products, as part of a fundamental reshift of their strategy, has pulled out of a number of projects, including ours, in terms of energy transition. And so, yeah, the landscape changes. And for us, that, while certainly working with a partner like Air Products for many years has been great, it also presents a real opportunity. We've learned so much since we started this project. This is a $3 billion expansion project of our facility in Los Angeles. And we've learned so much. We've learned so much about even how to get better SAF yields out of the existing asset. So the project we designed a couple years ago isn't the project we would design today. And so, it's just there's in an environment of so much learning, your next project's not going to be, you're going to learn from your existing project, but your next project isn't going to be the same as your existing project.
How can you communicate that to investors? Because a lot of the investors or financiers you speak to will go, oh, you're tweaking their technology. Are you sure? And they want a technology that's de-risked and understood, and actually communicating that these actually changes that are going are beneficial and actually are something that makes the project more bankable, not less bankable.
Yeah, look, finance is all about risk, right? And so you've got to address risk, whether it's technological risk or market risk or policy risk or whatever your risk is. You've got to have a mechanism by which capital sources get comfortable with the risks involved in your project. So different environments create different risks. Our approach to dealing with risk is really all about transparency. And so we don't view our customer base so much as arm's length customers as much as they are partners. Our approach to everything we do is complete transparency, such that our partners can see everything involved in our risk profile. And as such, they're willing to engage in long-term agreements with us, knowing that the world is going to shift as we go. Policies are going to shift. When policies get more advantageous, the customer benefits from that. When it gets less advantageous, the customer pays for that. But for all of us who are active in the space, we all understand that there are so many correlations between feedstock and policy and various credit prices and the rest. It's almost impossible to sit at a moment in time and say, well, look, here's what's going to happen over the capital lifespan of this project, and we have de-risked all these elements such that we have a pretty good sense of what the policy of the entity that hasn't even been voted into. I mean, in the States, we're only 4-year terms, right? You can't do a project on 4-year terms. So as much as when we talked a year ago, we were in one policy environment in the U.S., and 12 months later, we're in the polar opposite environment. So, next year, I personally will, I guess, celebrate or regret my 30th year in this industry. But in 30 years, there's an awful lot of learning. But the big learning is the importance of agility. It doesn't exist that you can predict the future well enough to cover your risks. So you better figure out mechanisms to be sufficiently agile to be able to address risks as they emerge, because they will emerge. I heard the discussion about first generation HAFA versus A to J that you were just having a minute ago, and I think that's a perfect example of how policies are emerging in Europe that are leaning towards progressing to next generation technologies, and that makes perfect sense. Clearly, over time, we need to have technology and innovation. For us, and we're technology agnostic, where we're really focused is on market innovation, because that's going to be central to technological innovation no matter what. I've heard people that are promoting second generation technology criticize first generation technology, and I think that's a significant mistake. The market is going to be built on first generation technology. That's how nature works. You have a first generation before you have a second generation. That's just how it happens. But it's absolutely essential to next generation technology that the first generation works, that it's consistent, that we are able to build scale, that we are able to get new and expanding customers into the mix. So that's all being built on first generation customers, and those customers increasingly are customers who are buying the value of what SAF can deliver. It's not SAF itself. So maybe in the future it's decarbonizing aviation investor conference, right? But it's a different thing than SAF. You can only do it with SAF. SAF is a necessary component, but it's one step short in the supply chain. It's once you've taken the work of decarbonization off the molecule that's enabling it, now you've got something that can provide that service to fly from anywhere to anywhere in the world for anyone. So what's happening right now, which is so important, is that the infrastructure to do that in a high integrity way with independent registries and independent verification processes, all that groundwork is being laid now. And so that will continue to be a huge service to markets, and such that when you build your project wherever it is, Teesside or wherever else, and policies shift, because they will, that there's an infrastructure by which you'll be able to sell the decarbonization benefits of that project beyond whatever the policy was that triggered it originally.
We've got a good question from the audience asking you, as a producer, what are the top 3 agility mechanisms you would recommend? How do you maintain sort of your agility?
Whew. I think it's getting. I think it's about getting comfortable with. Every time things look like they're going really well, it's generally not going as well as it feels. And every time things look like they've taken a turn for the worst, there's an opportunity there that you might not have seen. And so I guess it's about, trying to be in a range of 4 to 6 emotionally every day. When things are going great, celebrate it, get up the next day, get back to work. When things look like they're going the wrong direction, there's opportunity in that, and play that opportunity. And I don't know that there's, I can't go 1, 2, 3 about agility. I think agility is a mindset, and I think it's a culture, and I think you build it into your culture. I think you try to build a culture around people that are highly adaptable. And then you're in an environment, and when you get a surprise, and you will get a surprise, when you get a surprise, you immediately get to work about, okay, how are we going to turn that surprise into progress? And I'll tell you, broadly, whether you're talking about our industry or a million other industries, the time when progress really happens is in downturns. And you see this over and over again. It's always the period of greatest productivity is in downturns. When everything is going swimmingly, you think you're a genius and it's great. And you just do the same thing you did yesterday because there's no reason to do otherwise. I think agility is a mindset, it's a culture about seeing the opportunity in unexpected change.
We've got another question about supply outpacing demand and whether this makes business unattractive. What are your thoughts about supply meeting demand?
Yeah, I've heard a million times that there are a couple of voluntary customers in the world, but there are only so many Googles and Microsofts out there, and then once you get past that, there's no real demand. I think that's crazy. I think that's nuts. I don't think we've begun to fight on the market side, and we're all on the same team here. Whether you're an airline or you're a supplier or where you fall into the supply chain. We all exist in service of Scope 3 customers, and anybody in any corporate entity, context who is trying to do whatever they do that's aviation dependent in a lower carbon environment. We've got tremendous opportunities. Just as most of you know, the way that we do carbon accounting is that we've got multiple carbon debits for any particular activity. So when you look, up the supply chain and down the supply chain, you've got multiple Scope 3 debits in the normal traditional carbon accounting system. So when we're decarbonizing, we've got multiple credits to apply to those multiple debits. And as we start to build out a infrastructure that can make sure we're not doing double counting, and that can make sure that everything is third-party verified. We have an opportunity to have multiple financial participants in every unit of decarbonization we produce. Well, obviously, that brings price points down. Obviously, as you bring price points down, you get a broader acceptance of that. As you get broader acceptance, you find all kinds of new uses for things, right? I mean, whether it's data science or what we do, once you get price points coming down, there's a broader demand for that. So, I've seen thousands of slide decks showing the future demand curve of voluntary compliance. I'm highly suspicious that any of them have it right.
You don't actually, do you consider yourself a producer, or do you consider yourself more a sort of a carbon abatement company?
Yeah, we produce because we have to produce, and as the markets begin to mature and take root, look, I think there's a big role for conventional energy to play in our space. Where I think we've had some fits and starts is when the incumbent energy suppliers are on the tip of the spear. They're not necessarily great at doing the kinds of things that I think we're uniquely positioned to do, which is to go out and create new markets and imagine some of the stuff I'm talking about now going into, an investment committee in a traditional energy company. By this point, we've lost them, right? This is very challenging stuff in any environment, but in a more traditional investment-oriented, conventional energy business, they're much more focused on, okay, we produce molecules. We know how to bring things in, convert them into something else, push those molecules out the door. Those molecules usually provide the service of energy in something to cause that something to go from point A to point B. So, are we a producer? Yeah, we're a producer. But we're a producer because we have to be to build markets and to supply markets. But where world energy's value over the long haul really is to continue to push this frontier such that all of us can benefit from the ecosystem that we're building, that all of us can benefit from the demand we're bringing into the mix. I'm in environments now where I hear insetting or book and claim as it relates to aviation is something that's been, existed since the beginning of time. The truth is it's a little over 2 years since we did the first project, and, knock on leather, I guess, the demand customers have responded really, really well to that, and it has gone very, very well. But this is still in its very early days, and I think the most important thing that's happening in these early days is the ecosystem that's evolving.
Perfect. I think we have now officially run out of time. So thanks, Gene. That was great.
Great. Thanks.